Okay, great. VAT. So, really, we're really looking here at a topic that's quite. Um, I mean, there's a lot of admin. When I say a lot of admin, the numbers are what they are. We literally have to follow the rules, very rules based. Um, really, and you almost have to do what they want you to do. So, let's jump into it straight away. I think it's understanding a number of things. So, first of all, the first thing is understanding this idea of what a taxable person is and what a taxable supply is, and therefore, if you're clear as to what a taxable person is, we then discuss when it is mandatory to register and when you also have to deregister. So let's jump into it. The key point is understanding the difference between, of course, well, when I say the key point is this difference between output tax and input tax, but understanding that VAT very much is a tax on goods and services, and typically is subject to finance acts and case law and government policy, and they can change the figures. And of course, again, you might see it in the news sometimes. There's an argument as to whether or not VAT should be charged on certain products. So of course, you charge VAT, it's a tax. People have to pretty much go along and pay for this product as well as paying the VAT that the government take. So the argument is, if you didn't have the VAT, more people would, of course, like anything to do with price, more people would buy the product. So in effect, we want scenarios where this tax in itself, right, really is a tax on the consumer. It's a tax on the consumer. So the reason why we're studying this is because we're talking about businesses, and businesses, in effect, because they're not consumers, because they're actually making products, shouldn't have to suffer this tax. So the whole idea is that if you've bought a product, in effect, that you should be able to claim back the VAT on it, because you're not using it for consumption. You're using it. You're creating, adding value to the product, and that's kind of the driving issue here. So what are we talking about here? So in terms of this person who can either claim back VAT on their purchases, we're really talking about either a sole trader, a partnership, limited company, who is or should be registered for VAT. So we'll look at let's jump straight in and carry on. And we know how VAT is calculated pretty much on the actual initial core raw material, and then you keep putting VAT on it. So it's really value added, right? It's called a value added tax. Right. Boom, 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 boom. Let's go. So the issue here is, of course, like I said earlier on, some things are entirely out. I mean, again, as you can imagine, VAT on salaries just wouldn't make any sense, because it's not you've worked, you already pay income tax, so that's entirely outside the scope. We don't even discuss VAT relating to salaries and things like that. So that's what's meaning. That's what this is referred to as outside, if you like, the scope. VAT, when we talk about exempt, it just means that HMRC or the government have chosen just to sort of leave it out. Who knows, one day it might be brought back in, but the key point right now is that it is exempt. So it is within the scope, it's just not looked at. So really the truth is, if it's exempt, anything you're dealing with here where you have insurance or land or financial services or education, no one is interested. You can't, there's nothing you can do. You cannot register, you cannot reclaim, you're nothing. Now again, like I was saying, that in order to, sometimes it's all about, if the government feel that there are certain products that they can, if you like, or they want to discourage people from buying, or they can actually get a bit more, they can increase the tax, if you like. It's currently at 20%, but there are certain products that it is kind of they almost, let me look at this, baby clothes and children books, if you like, at 0%. So that's the VAT on that in terms of output VAT. But you can, if you like, reclaim input VAT. There is something, though, the argument that if most of your products are typically zero rated, there is a restriction, of course. If the majority of your products are zero rated, there's a restriction on how much VAT you can actually claim, because in effect you're claiming all this VAT and you're not giving anything to the government. So these figures really about the amount that you're passing on to the government, in effect, because you put these percentages on your selling, right, on your sales. Right. So let's jump in. So the VAT return, I'm sure you've all seen that. You pretty much fill this form out and you pretty much will map or match any output VAT that you owe the government, that you've collected on behalf of the government from people when they pay you, and what you have claimed back from the government via your invoices and supplies, and you pay the difference to HMRC. In terms of registration, it is compulsory. You fill this form out. It is compulsory to register. There are two tests. There's a historic test, and we'll see that now, and there's a future test. So sole traders typically have one registration, but each company can have a separate. Each company does have each limited company has a separate registration, and we'll talk about group registrations later. Now, again, like I say, it's quite mechanical. The threshold is £85,000. You just have to know that, and it's quite mechanical. So there's two ways of testing whether or not you should register for VAT. If you're below this threshold and you're never going to be above it, then you can totally just not register. But you might register because it makes your business look like a professional. So you can still register. But in terms of compulsory registration, here we are. So you almost need to look back. So you get to the end of your month, whatever that month is. So for example, let's say it's June. You get to the end of June. So you've been trading, you stop at the end of June, you look back 12 months and you say, have I exceeded the 85,000 threshold? So basically you just wait till the end of your month and ask the question. In the last 12 months, have I exceeded the 85,000 threshold? And that's it, literally. And if you have, it is pretty straightforward. You must let HMRC know by the end of the next 30 days, which in this case would have been July. And then you must be registered for the 1st of August, if you like. It becomes effective from the 1st of August. Yeah, and that's the case with the historic test. With the future test, this is an ambitious test. This is literally saying, well, just look forward, and if you feel that in the month ahead of you, over the next 30 days, I should say, that you will exceed the 85,000 threshold, well, then you should literally register immediately. So let's kind of sort of see what the rules are. Just kind of looking at it looking at it here. So we see here that, like I said earlier on, the annual registration threshold is 85,000, and what we also see here is, like I said here, this one, the historic test is done at the end of each month, and literally look back 12 months to see. And once you get to the end of the calendar month, that is when you become liable. So that date is you become liable to really now think, okay, what do I do next? So that's what they really mean by liability. In terms of notification, within 30 days, and if it's effective from the first day of the second month following the month in which registration threshold is exceeded. In terms of the future test, you are constantly, like I say, looking forward. So as soon as you think it, so to speak, that in the next 30 days, then you become liable, and by the you are effectively registered, or it is effective from that, if you like, from that 30 days, but you must notify HMRC by the end of that 30-day period. And taxable supplies mean, well, we don't include VAT in that calculation, and we don't include exempt supplies, and neither do we include any supplies outside the scope of VAT, and of course no capital assets, none of that happening here. Just because, as you can imagine, these are unusual, these are not common. You're not selling off capital assets all the time, even though there is VAT to be claimed. Right, so what we'll do is we will do example 1 with this, because this will probably take us just up to 15 minutes. And so the issue here is that we're trying to find out, I mean, again, I say it's quite mechanical, because we're basically trying to find out, when do we get past the 85,000 threshold over 12 months? That's the task at hand. So here we see a scenario where this character called Andy is selling clothes, and it says that he's selling baby clothes 2,800 and prams 2,500. Doesn't matter if they're zero rated. If someone's zero rated, sorry, he will register even though they're zero rated. It's more the issue as to how much input tax can he claim is the issue. But in terms of registration, he will register based on whether or not it's zero rated or standard rated. So here we are. We have 2,800 a month for that and 2,500 a month for all prams. 0, 0, 8 plus 5 is 13. We have 5,300. So technically, if I look at the scenario here at the moment, I have 5,300 times 5,300 times 12. That takes me up to 63,600. So currently, it isn't compulsory for him to register. Now it says that in the second year, these figures will increase to 4,400 and 3,650. So that means that 4,400 plus 3,650 will become his monthly, if you like, incomings. So we now have a scenario where we're thinking, okay, listen, I need to, from now on, I mean, if you like, I'm going to start getting more. And so how much more do I need to kind of watch to know when I actually exceed the 85,000 threshold? So in the practicality of it, what we now have here is a scenario where 30th of September 2017. So we're here. I mean, there are easier ways to do this, but just to kind of, so you find your way, 30th of the 9th, 17. If you look back 12 months, you're making six, but you're making, this is currently 12 months. You're looking back 12 months. So one way to do it is to sort of say, okay, in the next month, because when you come to the 30th of the 10th, 17, one of the months from here would drop out, right? And you would take on a new month, if you like, going into the future, wouldn't you? So in effect, think of it like this, in a way you have 600, and then out of that will drop your existing 5,300, and you will now have, coming into the month of October here, 8050, if you like. And then again, what we now have is, if you like, this again here at 30th of the 11th, 17. What you now have is another scenario where you now have 5,300 dropping out again and 8050 coming in, so to speak, as you go month on month. And if you observe this, you see that really what's happening is that we just literally have a net figure of the difference coming in every single month as we go along. So yes, you are losing 5,300 from the months that you're coming out of and gaining 8050 as you're going in, but that in effect means that I could just simply say 6360 plus the difference, which is 8050 minus 5,300. You can do it mechanically if you feel safer that way. The key point is you just want to make sure you get it right, which is 2,750. So the question here is, how long do I have to go adding to 750 month by month till I hit the 85,000 threshold? So taking us to the answers straight away, just because I'm recording a video and I don't want to, it'll take forever to look at. What I now have is here, again, like I said here, if you look here, this is 66,350, 66,350, 66,350, 6 plus the 2,750 takes me to 69,100, and I add again exactly the same thing to 7,850, and I literally keep going, and I find out that in the month of May I will hit this threshold. So I get to the end of my month, and that's pretty much what we do, and you are liable to register at the end of this month. On the 31st of May, you're liable because you have now crossed the barrier. In terms of notification, you have exactly 30 days from there. So you must let HMRC know by the 30th of June, and you literally will register from the first day of the second month, if you like, or the first day of the second month following liability, if you like, however you want to language it. But the key point is that get your liable day, go 30 days in front, and then literally register on the first day. and that's it for that. For example 1. So this is the historic method. Again, just make sure you're happy to make sure you cut out, because it's 12 months we want, right? So the whole angle is, as I move forward, I will leave out a month from there and I will gain a month from here, and you keep going until you get to crossing over into the 85,000 mark. Cool, great stuff, and we'll carry on with example 2 and 3 in the next video.